In this video, traders, we're going to look at the 3 pillars of a great trade. Stick around. Hey guys, well, welcome to you. All right, if you haven't checked out our channel sponsor yet, there's a link to them in the description below. Thank you for being here. Thank you as well for all your support, your subscriptions, your comments, your shares, your likes. Okay, so 3 pillars. My pillars. Hey, everyone's got their own pillars, but I think there's a 3 key pillars of a great trade. And yes, I've only drawn 1 pillar. Guys, you know my drawing's not the greatest. I'm fortunate that my trading is way better than my drawing, so I just did 1 pillar. So anyway, the first thing is risk-reward ratio. This is something we often overlook, and I don't know why we do it, because we kind of get so focused on the setup and the strategy, and sure, that's super important, but guys, risk-reward ratio just makes things so much easier, makes your life so much easier. And I know sometimes we can't get quite what we want. The market conditions play a key part in that. If it's really, really ripping, we're going to get those 3 to 1s, 4 to 1s, 5 to 1s, 10 to 1s occasionally. And very nice to get a 10 to 1 now and then. Sometimes you have to settle with a little bit less because of the instrument you're trading, because of the conditions. But we must have that good risk-reward ratio. What I mean by this is kind of very briefly is we're risking $1 to make 3. So if you're risking $1,000 per trade, you're expecting to make 3, but that's not an expectation of a hope. It's like, okay, we should be getting that a lot of the time with our final target. It probably should be going there rather than saying, oh, I'm expecting to go 1,000 pips and I'm only risking, X number of pips. You need to actually have it in the right conditions, but risk-reward ratio is key. And actually, when you kind of listen to super traders, traders that are at a level that are way up there. Now, Paul Tudor-Jones, for example, one of the things he says is he's always, and if he's not market wizards and stuff like that, I definitely recommend those kind of books and those audio books. Many of them say, who have been in this game a long time, many of them say that I'm always looking to risk 1 to make 10, to make 5, to make this. That's my key thing. I will pass on a deal, on a trade, on an idea if I can't express it in a way where I get a powerful risk-reward ratio. And we shouldn't be any different, guys. Sometimes we're a bit slack. I'm going to put my hands up and say sometimes myself, I'll find a great setup or strategy, ticks my boxes, ticks my filters, grades really, really high, triggers really looking good. Those of you on the program know all about that kind of thing. That's why I'm going, yes, I'm ready to go, ready to go, ready to go. And the risk reward's not quite there, but I'll still be like, you know what, I think it's got a high chance of working, I'll take it. And yeah, there's nothing to say you can't do these, but focusing more on a good reward for the amount of risk we're taking. In the day, guys, hard-earned capital, hard traded earned capital. We made money by going through the mill to get our account to where it is. Even if you're starting out, you've worked hard for it, regardless, it's your money, you've got to kind of really respect where you're putting it in, and you want to be getting decent return on it, because we're working hard at this, guys. It's not passive investing. This is actively working on margin, leveraging ourselves up, looking for superior returns than most other places where you're going to put your money. So we should be expecting a good yield on that in terms of risk-reward ratio. Second thing, guys, is market conditions. I can't kind of express enough how important this is, and something again I've learned the hard way, trying to force things that aren't there when the market conditions are very quiet, trying to buy breakouts in range bound environments. Fortunately, made all those mistakes a while ago. Hey, listen, will I make mistakes moving forward? I'm sure I will, but you go back 15 years ago, they were making all these mistakes. The market would be ripping to highs, I'd be trying to sell short, market would be going quiet, I'd be trying to buy breakouts. These are strategies that have worked for me. Why they're not working anymore? Conditions are changing. So if you are aligning with the second pillar, which is the market conditions, if we're in a strong uptrend, just don't try and fight things. There's setups and strategies we're trading exhaustion, trading this and trading the other. But if the market seems to be gapping up most days, the market seems to be rallying most days, or vice versa, it's falling most days, it's gapping lower, or it's range bound, just align yourself with the conditions and say, hey, all the rising tide lifts all boats, falling tide drops all boats, or whatever the phrase is, but it's definitely the rising tide lifts all boats. I don't think the falling one's in there, but you get the idea. The point is, if it's a downtrend, guys, you're going to get all the stocks are going to get brutalized. If the dollar is persistently weak, then you can expect the currency pairs to show that in their charts. So just aligning yourself with market conditions just helps. Risk-reward ratio, first of all, align yourself with market conditions. You're nearly there now. You've done the hard work. Yes, we can finesse it and stuff, but you've done the hard work. The third thing is, if you don't have this, we'll just waste all of this effort, is the confidence in your system. Why? Because you could pull the trigger on a beautiful 5-to-1 risk order ratio trade. The market conditions are on your side, market's ripping off, you buy a nice little pullback, nice little wick, ding, you're in a nice little bull flag. You guys know I like bull flags, high tight flag, bang, pulling the trigger, stops in a nice sensible position, starts to get in your momentum, you get a day under your belt, and then you're like, oh, I think it might reverse on me. I'm a bit worried about losing my money here. And you come out and you grab your profit. And you're never gonna get the 3-to-1, the 5-to-1 that you've planned out because you don't have confidence in your system, or it starts sitting by your stop. You're like, oh, I'm gonna move my stop. I don't want to get triggered. You know the mistakes, guys. We've done plenty of videos. Just say we've talked about all these mistakes, and no doubt we'll cover these in depth in future as well, because I'm always coming up with different ways that I hear how different people overcome them, and kind of share experiences myself as we kind of progress and we learn from each other and this kind of stuff, which is super good. But confidence in your system, if you haven't got the confidence in your system, you're gonna overrule it when the going gets tough. When you kind of had a couple of losing trades, you're not gonna want to pull the trigger. You're going to think, oh, I missed the trade, and then take the FOMO, and then you'll miss out on the risk order ratio. You're going to close the trade too early. You must have the confidence in your system to be able to execute and hold the trade to the point of exit, whether that is a profit target, whether that is a stop loss, whether that is a review point after X days, X hours, whatever. You must have the confidence in doing that. Otherwise, you're never going to see the results of the power of the risk order ratio and the market conditions. So those are my 3 pillars of a great trade, guys. Risk order ratio being super high, market conditions being aligned with the strategy you're using. There are conditions obviously that are more preferable than others sometimes, but the most important thing is you're using the right strategy for the current condition. The third and final thing is just the confidence in your system. And I know that takes time, especially for new trading. Like, how can I believe in my system? How can I trust it? I've got no track record. I'm gonna have to prove this is working. But you've just got to pick a strategy and stick with it at the beginning. That's the key, is picking the strategy, picking the system, sticking with it, and then seeing what happens after X number of days. I'm digressing very, very slightly, but if you do pick a strategy and you don't know where it's going to work, just give it time. Say I'm going to give it 30 days, 45 days, 50 days, whatever it may be, and then see if it's something that you want to continue with. Otherwise, you're flicking around all over the place. So I recognize that's difficult for new traders, but confidence in your system is well worth pushing for and trying to achieve. 3 pillars of great trade, guys. What do you got 3? Stick in the comment section below. Always interested. I think everyone's got 3 different pillars. Take care. See you next one. Bye-bye.